I differentiate between a stock tip and an investment tip. A stock tip refers to a recommendation about a particular company. An investment tip refers to advice on how to invest and is independent of the stocks. In my blog, I cover investment tips. While I share my analysis of companies, they are meant to be references to develop your investing skills. Those asking for stock tips assume that it will enable them to make money. For this to be true, first consider the basis of the tips. What are the sources? Are they in line with your investment approach? Do they share the same risk approach? It is important to know the source of the tips so that you can identify the motives. You can then decide on its quality. A good stock tip is one that is well researched, has justification for the recommendation, and is transparent. When identifying the motives, I dig into three. Is it part of a marketing plan to sell you a product? Is it just a casual conversation? Or is it a scam? Scams are investment schemes to get you to part with your money on the promise of a questionable financial opportunity. There are many types of scams as illustrated here. A pump and dump scam is one where scammers buy thinly traded stock at low price to pump up the price. In a churning scam, the scammer places both buy and sell orders to create a false impression of activity. If you want to know more about the other scams, read the article. The key is to avoid them. When you receive the stock tips, you have to be aware of whether they are in line with your investment approach. You can imagine the disaster if a tip intended for a day trader is used for a long-term investment. If your investment is to be different from the crowd, the stock tip is not useful if it has been given to everyone. You also have to consider the risk approach. There are two schools of thought when it comes to risk. Both approaches risk mitigation differently. They will impact on portfolio construction, holding period, and how you treat the investment. In summary, a stock tip helps you cut short your investment process. You should then review it in the context of your investment approach and risk mitigation plan. The last thing you should do is be caught up in the emotion of the stock tip and change your investment style. If you want to know more, read the article. Thank you.